Now that you know the different types of loan options you have and your borrowing capacity, we can now dive into the wild world of properties. It's a bit crazy out there once you get a loan approved, and hundreds of properties there, hundreds of suburbs. Realestatedomain.com, that's normally a friend for the weekend. You do a lot of house hunting. So in video 10, we're going to cover the different types of properties that are there for sale and the people those are involved in your purchasing process of your home. So let's kick it off. So normally, when you buy a house, when you buy a property, there are two types of transactions. You can either buy it through a private treaty or through an auction. So when you go and buy through a private treaty, you normally get a cooling off period. You put a 0.25% deposit, and then you get a cooling off period where you do your inspections, pest and building inspections. You get a loan unconditionally approved, and you make a more educated decision because you've got the thinking period, and then you get to move a little slowly during the process. Whereas in auctions, you do go and bid in that auction, and you pay 10% when you win the auction. And then if there's any negotiations on the contract, you do it just before the auction too. Okay, so the auction is a little bit of the wild way to go. However, there are big properties which are very difficult to, a certain value. They go through in auctions, and very popular suburbs. Lots of the properties are normally sold through auctions, and that's the way to go about it. So yeah, private treaty versus auction. Those are the two ways which normally people buy properties. So what types of properties are there in the market? So that's the purple color in the slide. So they're normally freestanding houses. So houses which has their own land component and they've got the house in there. Those are the freestanding houses. The other ones are apartments or units. So you see if there is a lot of apartments in a building. Look, there apartments and buildings sometimes also called high density apartments. So if there are more than 30 apartments, or if it's more than 4 stories high, they're called high density apartments. Some of the banks don't like them. So with apartments and units, there are strata involved. So be mindful of that. Townhouses, again, townhouses and villas, very similar. They are a set of houses within a certain within the compound, and they have a strata component on it as well. So some people, those who can't afford houses, they do go for townhouses or villas in a certain suburb, and apartment is an option as well for them. Um, so those are type of properties. The other one in the center, it's very interesting. People do get confused. So they are how do you what type of properties are normally there? Like it could be a ready built home. So let's say there's a house that's ready there, like it's an existing property. So that's normally the house people think, okay, we're just going to buy a ready home. So it could be an older, new ready home. So that's one of the purchase. The other one is called off the plan. So off the plan is the house is not ready as yet, but you pay a small deposit. It could be ready in the next 6 months or 1 year or 2 years or 3 years. And in the off the plan property, you get a house that's complete. You get a keys to the house, and then you enter the house, and that's when your loan starts. So that is off the plan. House and land package, on the other hand, is a little different. You buy a land, and then you sign a contract for the house. So your mortgage on the land starts straight away, and on the build, it starts on a progressive payment. So what they call it, a progressive payment. So people do get confused between off the plan and house and land, but it's two different things. Off the plan is you get the keys, then your loan starts with the house and land. So when the land is registered, you start paying the mortgage, and the house is built in progressive payments. Okay. The other one is who are the people that are involved in the transaction. It's just good to know information. The ones in the blue, so the broker or the bank. We at 910 Finance would love to help you if you be part of the property journey. The other one is a real estate agent. So the other ones who are actually selling you the property. If you see a property in the market, sometimes you could directly buy it from the owners as well. Okay. The other person, very important in this link, is the solicitor or the conveyancer. The other ones who are reading your legal documents, and they'll give you more advice on the property if there's anything wrong or right. But again, please speak to them, and they are the right person to deal with, because they give you very, very valuable advice. In some cases, people are also using a buyer's agent to buy the property. It's becoming more and more common these days because people are time poor, so they're using a buyer's agent if budget permits. So yeah, so these are the main things: the real estate agent, the broker, the buyer's agent, and the solicitor. If you have any questions around any of these, please let me know. And again, as usual, thank you for watching and see you in the next video.